Dear student, now I am going to teach you about how to prepare final accounts in a not-for-profit organization. Here, final accounts means two accounts we prepare in a not-for-profit organization. One is called Income and Expenditure account, another is called balance sheet. Income and Expenditure account is similar to trading and profit loss account that we have prepared, but balance sheet is same. Now, Income and Expenditure account is an account which is prepared in a not-for-profit organization to compare all incomes which is recorded in the right side and all expenses which are recorded in the left side, and to find out surplus or deficit in the organization at the end of the year. Here we call it surplus but not profit, because it is not a profit-making business. And we call deficit not loss, because surplus and deficit directly added or deducted from the capital fund. Surplus is added with the capital fund in the balance sheet, and deficit is deducted from the capital fund in the balance sheet. So we prepare same way. Income and expenditure account at two sides. Right side is called income, left side is called expenses. And all incomes which are revenue in nature, that they are recorded in the income side, and all expenses which are revenue in nature, they are recorded in the expenditure side, that is left side. Now, in receipt and payment account, we have two types of items. One is capital item, another is revenue item. Revenue items are recurring in nature. Capital items are non-recurring in nature. So, capital items are taken to balance sheet, and revenue items are taken to income and expenditure account. So, the examples of revenue items are subscription, then entrance fees received, then donation received, grants received, any other proceeds, that is sale of old newspaper or sale of tickets in a charitable show. All these are income which are revenue in nature, they are taken to income and expenditure. And the expenditures which are revenue in nature, they are rent paid, electric bill paid, telephone bill paid, and cleaning charges, office salaries, any other expenses which are recurring in nature, they are called revenue. And capital items are directly taken to balance sheet. Balance sheet has two sides, that is liability side and asset side. Asset side, all assets are recorded either on permanency or liquidity point of view, and in liability side, first we'll write capital fund, then we'll write, if surplus is there, we'll add surplus, if deficit is there, we'll deduct deficit, and then all other liabilities will record in the liability side. And some adjustments are there, that is subscription, stationery, all these adjustments that I have already discussed with you in final account of a profit making business. Same way we'll also adjust. For example, arrear subscription receipt, which is going to be received in future at the end of the year. So that will be added with the subscription, and arrear subscription at the beginning of the year, that will be deducted. Similarly, advance subscription which has already received for the coming year, advance subscription at the beginning it will be added, and advance subscription at the end will be deducted. And same way, arrear subscription at the end, it will be recorded in the closing balance sheet asset side. Arrear subscription at the beginning, it will be recorded in the opening balance sheet asset side. Similarly, advance subscription at the end is a liability, it will record in the closing balance sheet liability side. Advance subscription at the beginning, it is a liability, it is recorded in the opening balance sheet liability side. Now, sometimes capital fund is not given. Same way we'll find out capital fund by putting the equation, that is asset is equal to liabilities plus capital fund. Then after finding capital fund, you can prepare balance sheet by adding surplus or deficit with the opening capital fund. In this way, we can prepare final accounts in a not-for-profit organization.